Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there and names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Welcome back to the channel. So today we're going to talk about Warren Buffett and a unique pick that he is talking about in the stock market today and why I disagree with Warren Buffett's strategy. Now, we all know that the rich always want to get richer, and before they tell you what they're doing, they're going to make sure that they've already dipped their money into the pot so that you can put your money on top of theirs. So I want you to be aware of it, right? You have to be smart. You have to understand what society is trying to do to you in order to be ahead of the game. And so what Warren Buffett said was that he believes that the insurance market is actually the best market to get in right now, where people put a whole bunch of money into insurance, and then all insurance has to do is give you a piece of paper, right? He tried to make it sound as though insurance has zero liability, no real skin in the game, and that people just hand them money over fists with no consequences whatsoever, which is absolutely not the case. Now, what I'm going to compare insurance to, whether it's car insurance, homeowners insurance, it's an open market. It's not regulated, right? If it was regulated, Florida would have their own insurance. So many other companies would have their own insurance. But because it is not regulated, because it's an open market, businesses get to dictate what their prices will be. And to be honest, the business doesn't necessarily dictate what their prices will be. The market dictates what the price will be. Now, it is up to you as the consumer to understand these things and understand what is truly the cost of insurance, right? And so when I'm doing a quick assessment of what insurance truly is and how it plays its role in our life, I'm trying to see how much can insurance scale before everyone says enough is enough. Now, the state that I live in requires you to have insurance driving and operating a vehicle. It does not require you to hold insurance on your home. And most banks do not require you to, most banks want you to carry insurance while you have a mortgage. But to be honest, it's in your hands as soon as you're at 20% and you no longer need to have an escrow. So with that being said, you got to understand the housing market historically has grown about 3 to 4% year over year. The housing market, where you rent real estate, where you have commercial real estate, where you have single family homes and multifamily homes, has grown about 4% every single year. Now, obviously, last year was an anomaly where it grew well over 10%, right? But historically, real estate grows about 4% year over year. That is a free market. And so we can look at housing costs, right? Insurance will increase with the cost and price of housing increasing, as well as the cost and price of cars increasing. But we know that houses only increase typically 4%. And so we can't really fathom insurance increasing more than 6% or so year over year. And then you got to look at the cost of cars. The car market was heavily inflated and the prices were ran up. Now there's being a lot of pushback because of interest rates being so high for so long and people trying to get cheaper cars into the market like Tesla and other automakers. And China is even trying to enter our market as well with their electric vehicles. That's going to lower the cost of cars. That's going to lower the cost of insurance overall. So don't just think that insurance only goes up. It can absolutely come down. So that's another thing that you have to take into account. Now, when I look at that, I'm saying to myself, okay, if I study each and every insurance vehicle that's out here, from Allstate to what other insurance do you have? State Farm, you got Geico, you got all these other insurances, right? If you study each and every single one of those insurances, you're going to find the one that's undervalued, the one that pays you a good dividend or no dividend, and the one that has the most ability to grow, the one whose balance sheet is growing year over year, the one who is becoming very, very profitable. You see, the thing about this is that when we were hearing insurance rates are going up, insurance rates are going up, insurance rates are going up, that was the time to buy into insurance. Not now that people are promoting the stock of it. Not now when people are promoting how valuable it may be to buy into insurance. No, you should have been buying into insurance when you heard that the cost of insurance kept going up, because that's when they were improving their profitability, and that's what you're going to see on their balance sheet. And then all of these emotional stock market investors are going to put their money on top of that money now and raise that stock even further. So your Geicos of the world, your State Farms, your Allstate of the world, they're now going to show a very, very profitable balance sheet going to the last quarter of 2024, because all the money has already been put in. So again, the rich get richer, yes, but the rich get richer because they've already put their money in this game. They already put some skin in the game, and now they're talking about it to just coast for the rest of 2024. So what I really want you to understand is, when you see these talks, when you start to understand what is truly going on within the economy, it is now time to start striking when the iron is hot. And I won't lie to you people, I was also oblivious. My insurance went up on both of my properties. I had to go and look for new insurance because I absolutely did not want to be paying $400, $500 more every single month for something that I didn't really think was worth paying for. I have brand new properties. I've renovated, fixed up. I didn't really believe that anything would go wrong, and if it did, I probably wouldn't use the insurance because I don't want the cost to go up. And so I said, you know what, let me go ahead and look for something cheaper that gives me all the same benefits. And I did find that. So the thing is, like, we have to understand that when things like that happen to us in our own lives, we have to start looking at it from another perspective. How can I make money off this thing and not them just simply make money off of me, right? These are the things that we have to understand moving forward, and it is my fault for not addressing this more in depth. I did talk about switching insurance coverages on my real estate, but I never talked about the financial aspect of gaining money through it as well, which I should have in the beginning. So now let's pivot. So I've just told you probably to not invest in insurance. Although you should still do your own research, you should still look at all the insurances. And if you believe that one is very undervalued, then it might still be a great time to buy into it and increase that value. And I'm also going to look into it myself. So this is not me telling you not to look into it, because if I see a stock severely undervalued and it's definitely making money and their quarter earnings report is supposed to be very phenomenal and it pays a dividend, I am definitely going to say, okay, I should definitely buy into that. So, you know, I'm actually about to redo my entire stock market portfolio. Everybody knows I have over 30 plus stocks in my portfolio. And so it's going to take me a while to redo it, but I'm definitely looking to add some new contributors to that portfolio, especially some things that I think are going to be high contributors, because this year hasn't been the best year. I gained about 11% year over year so far, and that's including all of the bad days in the stock market last week where it was down for 3 consecutive days. So I expect to end the year probably around 16-20% returns, because obviously the stock market is already rebounding, and so that's going to affect me in a positive way. And I'm throwing a lot more money in there, so that percentage should go up as the stock market continues to go up. But right now, certain things that I'm looking at is things that are innovative, things that are, you know, going to move the needle further and more further than expected. Things that are going to get people excited. Things that truly do push the envelope. So insurance has been there. It's a long tried and true. And you know me, I love blue chip stocks. I love companies that have been around for a long time. But I'm looking for the innovators like ChatGPT, like Tesla. I'm looking for innovators right now. I'm looking for companies that are willing to stand the test of time, that are willing to push through recessionary periods, that are willing to push through high interest rate environments, that are needed and a necessity for investors and for the consumer today. And so for me, you know, I'm very, very big on understanding what is necessary moving forward. I'm seeing a lot of retail stores shut down, Burger King shutting down, Big Lots shutting down, Tide cleaners shutting down, a lot of laundromats. And so, you know, when we look at these things, like, okay, all these restaurants are not necessarily necessary right now. All these cleaning services aren't necessary right now. Right? These things are being pushed to the side. They're being pushed out and cast away. But what jobs are coming available? What jobs are people looking at? I looked at the government website. I saw them getting rid of some of their tax workers, some of their tax preparers and professionals. Why? They hired too many. They hired too many trying to get taxes from people. And now you're paying for jobs that are essentially not needed. Right? And so they're now trying to relocate and redistribute these people. So now you have tax preparers who truly only work about 4 months of the year. They're now looking for different work to do in order to show why they're being paid by the government and being paid as a resource to the government. And so, you know, you try to look at what is truly important. Obviously, children are going to be important. We got a park being fixed back there. I live next to a school. And so you can start to understand, okay, education is always going to be important. What is improving education right now? What is helping our children right now, right? Like those things are going to be instrumental in helping us move forward. And what is in the stock market that is going to allow children to grow and succeed? What is in the stock market? What education are these children receiving? How is it going to benefit them? And where is the money to be made in these products and services? So those are the things that I'm going to be brainstorming and thinking about today and tomorrow, because I really want to know, hey, what is the next big thing? And then I'll go ahead and share it with you, just like Warren Buffett, after I've bought into it. But truth be told, you want to know that I'm also investing my money and putting my money where my mouth is, because like if I'm not doing that, then why would you even listen, right? So I tell you I invest in Tesla, Meta, all these things is because I put my money there. And you can see that in my stories, you can see that in my shorts, you can see that in some of the videos I create, how much money I've put into these companies and stocks. So you already know, oh, okay, he's heavily invested in this, he's heavily invested in that. And so when people hit me up, whether it's on Instagram or YouTube, and they're asking for financial advice, I'm like, hey, you already know what my portfolio is, but you got to do this, and that, so that you can ensure your own success as well. So right now, do I agree with Warren Buffett? No, because I believe insurance cannot continue to go up. I know people who drive dirty, no car insurance whatsoever. And so there's a market that's not being tapped into. Why? Maybe you're too expensive. You know, maybe you're too expensive, so you're oversaturating the market to where certain people just can't afford it. Your cost to entry, your barrier to entry is way too high, and therefore you have a group of people who are not being, serviced. And when you have a group of people not being serviced, you have money being left on the table. And I don't see that as an efficient business. You have to maximize and optimize the potential that's available to you. You have to be able to cater to every single niche. You have to be able to offer services, even if it's very minuscule, like no car repair, but tire changes. Like anything whatsoever that gives you some wiggle room and runway to say, hey, I've hit every single customer base and I've really truly maximized the potential of earnings this quarter, because we have now gotten to every single demographic, every single consumer. Now, I'm not saying you shouldn't have a target audience as a business, but you should also be able to expand outward, especially after being in business for so long, to where you can address every consumer's needs at a reasonable price range. Now, if you like this video, make sure you leave a like, comment, and subscribe to the channel. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you on the next one. Peace.